So it's going on mid-market um, on our trading day, live trading room. And what we've been seeing today is a pattern of declining trends. We've been bouncing a little higher, a little lower, but overall trending lower on all three of our indexes, NDX, SPX, and RUT. The Able trend signals have given us some good opportunities today. Prices have been moving quickly, and because we always try to work our trades on the entry and the exit off of the mark as opposed to the bid ask, sometimes we miss out on an opportunity, but overall, that's what's going to give us the greatest profit opportunity. But I thought it might be beneficial for those of you who have been following along to go back and revisit a view of NDX in particular, because last week we were talking quite a bit about how NDX was trading at what I refer to as a natural level of resistance. And that natural level of resistance aligned with prior natural levels of resistance to form a declining trend. And that's identified by this red channel line. And then the corresponding parallel support channel line is identified and placed at these lows here. But what's interesting to me, and this is what I've done for years, I've been trading for over 30 years, but what's interesting to me is to go back and look at a pattern with the benefit of hindsight. Now, we all joke about hindsight trading. You can't trade in hindsight, woulda, shoulda, coulda, all those types of things. But there is a significant value, by the way, in the live trading room. If you're following along, we had a potential buy signal flashing on SPX and also on NDX. So we'll see if they have not printed yet, but we'll see whether or not they print. And that may change the direction of the trade that we want to take. But what I find interesting is to go back and look at these patterns, because when I'm tracking the pattern on the day that a particular price bar has formed, I don't know where we're going after that. But if I have history as a reference, and that history appears pretty solid to me, it's interesting to me as someone who appreciates technical charting to then go back and see, well, how valid was that at the time that it was occurring? And now, with the benefit of hindsight, you can see here that that series of price bars that formed all along that declining line of resistance, in fact, were valid. This declining line of resistance was not adjusted. This declining line of resistance was in place, and essentially what happened is we traded up to that level of resistance and then moved lower. What that's telling me is that the market had a natural boundary, had a natural level of resistance there, that strong headwind, it was difficult for the market to break above that. That is not unusual at all. You can go back and look at historical patterns through most any time period for as far back as you want to go, and you're going to find that these indexes trade in reasonably reliable patterns. That doesn't mean all the time that you're going to know exactly where it's going to go from here, but when you have the benefit of hindsight and you have the benefit of being able to go back and look and see when it confirmed a particular pattern, it starts to give you a higher sense of confidence in looking at channels and looking at cycles. Now, within that declining channel that's highlighted in red, we also have a rising cycle. I refer to the shorter term pattern as a cycle because it's all contained within the longer term panel, which is called the channel. Within that cycle, we had movements higher and lower. In fact, within that cycle, we had a 427-point range of movement from low to high, back down to low again. When we moved higher on this last go-round, we stalled out at that longer-term channel resistance, and since then we have moved lower. Now, what's very interesting to me is we're getting very close to this rising cycle support. Rising cycle support is at around 43.75, and we're currently trading at 43.99. So what I will be paying attention to on my bar charts is whether or not we stall at this level and head back higher, and then subsequently will we stall back up at that declining resistance, or are we going to break through this channels or this cycle support and continue to trend lower within the declining channel? I mean, the next level of support below the rising cycle would be the 2 standard deviation Bollinger Band at around 4,300. Then you have the 3 standard deviation Bollinger Band around 4,218. And after that, there's not a lot of support. There would be support that would form if we started to trend down this way. You're not going to see most likely a fall off all the way down to support. At one time, you're going to see cycles up, cycles down, and you're going to see a trend moving in that direction. But you know, it's not out of the question that come midsummer we could see NDX trading at 3,700 range, 3,800 range. Now, I want to be very clear, I'm not predicting that. That is not a statement to imply that that's going to happen. It's just saying, based on a historical view of the pattern, it's very clear to me that that is a realistic possibility, and we shouldn't be surprised. If something like that were to occur, there's going to be all sorts of financial media that's going to be talking about, they use very dramatic and dire terminology when the market's selling off dramatically. And there's going to be all sorts of language like that being used. I've heard the term death spiral and contagion in the market and kind of ridiculous terms. When you look back at a pattern and go, well, that could happen. So the bottom line is, how do you use that to trade? Well, I take into account where we are relative to my bar chart patterns. Not everybody likes to take a look at their bar charts. They prefer to just look at the signal that's telling them when to get in and get out of a trade. But my bar charts give me a reference point of where we are trading relative to history. I'm not going to take my active trading signals off of my bar charts. In the live trading room, I don't take my active trading signals off the bar chart. I take them off of our able trend charts. And the able trend signals are giving me clues on a 3-minute basis, 5-minute basis, and then 30 and 60-minute basis, when is a good opportunity to get into a trade. So for example, right now, those of you who are monitoring the Able Trend charts in the live trading room will see that we're starting to form red bars, which are sell signals on NDX 5-minute, on SPX 5-minute, and on RUT 5-minute. And we're double stacked to the downside, which means we have both a 5 and a 15-minute level of resistance on all 3 indexes. So it's heavily weighted to the downside right now. And the only reason I might hesitate is because I have a bar chart telling me that we could potentially be at a level of support. So this is where it can get a little confusing and you feel like there's a conflict. I'm not going to pay attention to the bar chart in terms of it providing support if I see a good signal on my Able Trend charts to go short. I don't want the bar chart to interfere with my my opportunity in taking that signal, because the bar chart, as I said, is just giving me a reference point of where we've been and where we're currently trading relative to that history. Where we're trading on the bar chart may influence my decision to be slightly more aggressive on my entry or slightly more conservative on my entry. So that's stuff that we've talked about before. And then SPX, I'm just going to show you real quickly on a daily chart. We're in a very, very tight downward cycle, and it looks like we've actually broken below support of the rising cycle that's all contained inside of a longer term channel. So we're just waiting now for confirmation, but this right now is a great signal in my opinion, that since we've broken below support of that rising cycle, I might be more apt to be slightly more aggressive on an entry into a position to go short on SPX when it is triggered by either a 3-minute or 5-minute Able Trend signal. So we've been talking a lot about the charts, the bar charts, and how they relate to the Able Trend signals. I want to be very clear again. I hope I've been very clear in the past. After you've done all of your analysis, and I think it's very important that you do that, I do it personally at least once a day on my bar charts. Then with that knowledge and that frame of reference in mind, go to your Able Trend charts and choose your trades based on double stacked patterns, 3 and 9 minute resistance or support, 5 and 15 minute resistance and support, and then the longer time frames, which I generally refer to on Able Trend. I use the 30 and 90 minute Able Trend time periods. So if you're brand new to the live trading room, this is an active trading environment. Active trading doesn't mean that we are constantly opening and closing trades. We do some day trading, although we don't consider ourselves to be a full day trading environment. We leave ourselves open with the option to day trade. If you get into a trade and you don't want to day trade it, we have methods that we use to secure and lock in a profit without day trading. So a lot of flexibility. One of the things that Michael and I were talking about earlier today is the importance of being patient when you're trading. One of the things I believe that gets traders into trouble is impatience and the feeling as though you need to take some action. You actually don't need to take any action. No action for the entire day doesn't mean you're not an active trader. It just means that you made a wise choice to not follow sketchy signals or questionable signals. It means that you decided to hold your capital in reserve, protect your capital, not put risk out there unless you feel confident that that risk was worth putting your capital into. So I hope this is helpful to you. We're going to try to consistently do a mid-market update and talk a little bit about the charts and talk a little bit about trading philosophy. We have more and more people that are joining us in the live trading room, and we want to create an environment that is helpful to everyone. The Profit Accelerator program, which is a 4-webinar series, is designed specifically to teach you the basic structure of what we do in the live trading room, so that then you have the opportunity to participate in the trading room and have a framework for what it is that we're doing. We answer a lot of questions in the trading room. We try to answer as many as we can. Our first priority as a trading team, Michael, Aaron, and Allison, our first priority is to trade the accounts that we trade. And then as we have time, we try to address questions and try to address comments and try to provide as much insight and instruction as possible as to what it is that we're doing. Sometimes we have a lot of time to queue up a trade and tell you in advance that trade is coming. Other times things are moving so quickly, we will put a trade on or we'll close a trade, and then you'll see that trade pop up. You'll see that trade confirmation pop up, and then we'll try to tell you immediately as quickly as we can about that trade. So it's an active trading environment. If we didn't have anybody in the live trading room observing our trading, Michael, Allison, and Aaron and I would still be here. The 4 of us will be working together, trading all of our respective accounts and enjoying the sharing of ideas, sharing of viewpoints, and looking for opportunities to make money. So I hope that's beneficial to you, and we'll look forward to additional mid-market updates as days come in the future.